right, let's do this. It's Jeff Mackey live. I'm Spencer Israel, and that
Woo!
guy's Jeff Mackey. And we're live. Amazing how that works out. Jeff, we are in the final home stretch of the final earnings season of the calendar year. We know that retail usually brings up the caboose. So here we are. This is it, right? We have some companies that you care about that are important reporting earnings this week. Some have already reported, some will report later today or tomorrow. And this is it. This is your grand finale, right?
And this is it. This is all she wrote, baby. And it's a particularly caboosey year for this particular crop of retailers. Not always the case for them. Costco's having an off year. With Lulu has seen better days. We'll get into them, but
Yeah.
that doesn't mean the stocks are terrible. Not necessarily.
No.
And I believe the start, our first stock is one that has had not a great year, but having a great day.
Yeah, with Chewy, you could say woof in more ways than one. You could say it as looking at the year-to-date chart here, or just look at the performance of the stock today as we record this. Actually, no, it's uneventful. It's down it's three quarters of a percent today. So
This is
yeah,
one where they didn't know what to do with it. They came out, the numbers weren't fantastic, but they weren't bad. And it's more of an economic tell that the reason to even talk about it at all. In bad economic times, people do cut back on their pets because people are heartless bastards, Spencer. And I don't know what's going on with that.
dude,
But
the intraday move here is wild. Well, not
the intraday move is
yeah.
wild, and it's kind of the end of the year, little thinly traded stock. But we saw this with Stitch Fix, which has been working up like crazy after dropping some 10-15%. We're seeing it with Chewy, today, where people just wanted to kind of take a dump all over the floor like a bad dog right away when the company guided lower. But then they realized, it's really not a super exciting company. They're all about just kind of the consistency that they deliver. And so more power to them. It's good enough. It's well run. The profits are kind of where they wanted to. It was down 8% to start with. They took down numbers a little bit, but they added 250,000 subscribers. And so, all things being equal, good dog, I guess. Not a bad dog. No visit to the pet store. No visit to that farm upstate that people bring their kids' dogs to.
All right, so the takeaway here is if you liked the company before today, you should still like it. And if you didn't, then you probably still don't. Right.
Yeah, long term, these guys are left for dead, and they're not going to die. It's just fine. It's just fine, but it's a tough space. It's definitely not a fantastic high growth industry. We were long this company a while ago. I was anyway, and kind of got out of it. The best days are behind it, but that doesn't mean that we have to put it out to the sunset just yet.
All right, let's talk about Chuck E. Cheese for grown-ups. Dave and Buster's. They are
Dave and Buster's.
No, they reported earnings.
They already
last night as well.
Yeah, they were out last night and fine, better than they were before. Still negative though. I was kind of hoping for a positive compare. I do follow this company. It seems like they should do better. They combine a lot of. It's a great place if you're the type of parent that wants to get hammered and bet on football while your kids play arcade games. Not a super broad niche, not thankfully a ton of Americans out there, but to the extent they're there, this is the place to hang. Really a function of mall traffic and a function of discretionary spend. We've seen the restaurants just get murderlated for the last few months here. And so when Dave & Buster's came out with kind of okay comps, we got new management in there a couple of years ago. Actually, you can see the stock was doing pretty well. They had a big turnaround plan. Everything was exciting. And what happens with these small caps that no one's really thought about in a while, they hadn't really thought it through all the way, and their remodels turned out to be not great. So they're rebuilding yet again. It's kind of a perpetual turnaround story. Not going anywhere, but not going anywhere very fast. There's not a huge market for 300,000 square feet of B-list mall type of kind of category. But it's a fun place to hang. If you're looking to play kind of oversized Pac-Man and skee ball, this is a nice hang. Otherwise, we can kind of keep looking. But up 15% today, so having a nice move.
Would you like it more if it was above the 200-day moving average?
No, you could not interest me all that much. You could interest me if their traffic went positive. Like traffic declining less than it did before isn't that great. And so the headline out there was improving comp store sales, which they are improving. Last year they were down 10%. This year they were down single digits. So, yay. The goal would be to be growing your business a little bit, but they're not going anywhere. It's a popular short. They should be private. They were talking about going private earlier, but the group that was going to acquire them, it was it's what's the other one with like the rat and the animatronics?
Yeah, Chuck E. Cheese.
Chuck E. Cheese. Yeah, this was going to be the merger. Dave and Buster's, Chuck E. Cheese. It's a merger made in heaven, or in this case, considerably south of there. It was going to be fantastic, but they don't flow a ton of cash. So they maybe should have merged with, rolled up Top Golf, Dave and Buster's, Chuck E. Cheese all together. It would have been fantastic, but that's for another year. Alas.
Dave and Buster's, we should know, does have a very small float, only 13.5 million shares. And the short percentage of that float is 75%. So when you say that this is a popular short, that's actually an understatement.
Yeah, people are just kind of cashing in on it. I don't know exactly the mechanics or why you would be that aggressively short these guys. I think because Chuck E. Cheese, was going to be involved, and then they're not doing so red hot. But again, it's nice to see that the corner of the malls in your local area or anyone's local area isn't going out of business anytime soon. I actually visited Dave and Buster's last year, and I'm still kind of working off the fat just a little bit. It's not a health food joint. It might be a little out of sync with the GLP nation.
All right, let's look ahead to some of the companies reporting later on this week. We'll start with Costco. We talked about this one a lot. Obviously, it had a great run. It's had a pretty underwhelming year from a stock perspective. What do you expect them to say, and what do you think going forward?
I think they're not going to surprise anybody. This is the last of the chains. The first Wednesday of every month, retailers report same-store sales every single month, and it was a fantastic event. It was really kind of newsy for a guy like me, and
what happened to
that? Turns out they just got away without reporting it. I don't know. It takes like 50 seconds to compile, and I don't know why they would not want to update their business. But right now, it's only Costco that does it. They do it in a really charming, old school, very let's keep expenses low kind of Costco way. It almost sounds like the beginning of Rockford Files, if you remember that show, like an outgoing answering machine message, like they recorded on a dictaphone. But so we kind of know what their comps are going to be. Their comps are going to be lower single digits. Business is not terrific. This has been all of a sudden kind of quietly a really crap year for Costco. You can see that just relentless selling from about halfway the year through. It's still at 43 times earnings. It's still expensive, and they still have the best business model going, or one of them, which is people pay a ton for the membership. The marketing concept, well, it really markets itself. They don't really charge you anything to go into the store, and what's wrong with that? But they flew a little close to the sun. They got a little hot in terms of the cultural relevance, and everyone was, I love my Costco so much. That's always a bad sign for a discounter because they're not doing anything exciting, and they've really kind of been left in Walmart's dust a little bit over the last few months.
If you just zoom out on the Costco chart, you can see there's a pretty clear pattern where the stock will do nothing for a year or two or even more, and then it'll rip higher for a year. And then it'll do nothing for a year, and then it'll rip higher for a year, right? It's pretty clear.
And they've done well. They picked a fight with the Trump administration, which these days is, just tantamount to the whole federal government. I'm not sure what's going on there. It's not a huge deal. But again, you need an argument at 43 times earnings. You need a pretty compelling argument to want to put new money to work. If you're trapped long, I'm not going to sell no matter what they say. I'm pretty confident they're not going to warn. They're not going to come out and say anything terrible. But honestly, the next two companies in particular, and cost to a degree, if you back out on the chart, it's not a tremendous looking 10-year chart. It kind of just is just sort of rolling over, and we might be at the peak of Costco's influence. Now, it doesn't mean they can't have a second act. God knows Walmart has been declared sort of post-peak a million times, and they're making all-time highs every week. So Costco's just got to figure out a different business. They ran out of catalyst. They raised their prices last year, not the prices, their membership costs.
Right.
They do that like every 6-7 years. And, that worked out great. And they made a ton of money doing it. And they had absolutely no one flaked on it. They continue to do exciting things to capture the zeitgeist again, but you just got to be patient. This is not where you're going to fix your year trading. You're not going to get a 20% ripper on whatever Costco says.
All right, let's move on and talk about Lululemon. Once upon a time, I waited like 45 minutes to get into a specific Lululemon location. This is probably 2 or 3 years ago now. Jeff, they report earnings tomorrow as well. What are they going to say? Is there any reason to like this thing?
They're going to say welcome now with no lines. They I don't know, man. It seems like if we're going to see any pops, if we're going to see any kind of back from the grave, Abercrombie and Fitch-esque type of moves, you might get that from Lulu. If you look at the longer term short interest, people are still shorting this pretty aggressively, more aggressively than they have in the past, oddly enough, because it was a $500 stock and now it's about 155 or 185, I guess. They've got a reasonable bottom in there. It's gapped lower, rather sharply lower, the last two times they reported. Last quarter, they did the old beat and guide the year dramatically lower, which analysts hate that. That's a pretty tough combination. They beat by like 25 cents and they said, oh, but the full year looks a little less optimistic. They're in one of those positions right now where they blame the consumer for a lot of stuff that's going on. And that's always just a huge red flag. So their communication's off. Their merchandising is not great. That's a picture of a guy that I took right there at the Lululemon. Now, I go shopping there all the time. I actually bought a fun pair of cords, not pictured. But they look good. I like the pants, but it's the first kind of new merchandise I've seen. It's the crossbody bag, black golf shirt, and stretchy pants look is pretty tired. And I say that as someone who once wore outfits pretty much exactly like that for quite a while. That said, expectations are low. If they can turn North American comps positive, which no one really expects they will, but if they can manage to pull that trick for the first time in several quarters, this thing, it could kind of blast off. You could get an argument that they're at least compellingly cheap. We're down to 14 times earnings on this, which is pretty cheap. Now, your next chart is a 10-year of Lulu. It's just not a great looking chart. I'm not sure what that's about 500 at the highs. So you can make an argument for support at 150. You can also make an argument that it's going to go all the way back to where it was in 2016. From an earnings perspective, they're earning a lot more. You had to pay that whole way up about 30 times earnings, but then again, they were growing earnings really fast. And right now they're doing a lot of consumer blaming, a lot of, this is a company we've been talking about how much better than expectations, how much better than bleak this Christmas has been, and how that's been such a great upside boon for the Gaps of the world, the Abercrombies, the American Eagles, name them, tons of companies, even Macy's beat. Lulu is where you will find the recession. If they go by the last few quarters, Lulu's going to come out and they're going to say, we still see a very choiceful American consumer. We see kind of a reluctant to buy American consumer. And that's just what you say when you're kind of going out of style. They need fresh blood, I think. What that 10-year chart really tells me is that a lot of very talented people went to work for other companies because it stopped paying off to get paid in stock options working at Lulu.
It was one of the most, if not the most remarkable story in retail from like 2017 to 2021-ish. Maybe, I guess the all-time high happened in late 2023. So you can say that, but that 5-6 year span was awesome. But outside of that, it really hasn't actually not been a great stock to own. So.
No shame in what they pulled off, man. It's the all-timer Hall of Fame, first ballot. Absolutely, unquestionably, no matter what the report on Thursday. But, in the meantime, that doesn't make it a great stock. Again, It's not that they're hopeless. It's that they need to rediscover. They're a cross body bag. These are the guys who kind of recreated the fanny pack for men. I was a huge early adopter. Yeah. Still like myself a good fanny pack, because where else am I going to put my phone? Right? I mean, it's come on. It's this. They changed the world. Once you change the world, it's hard to change it twice. And so, in a world of denim, Lulu can't really find their way home. And maybe corduroys will work. Maybe I will, in fact, swing the pendulum for them by adopting my corduroy look and my Lulu pants. I dig them, but we'll see. We're not there yet.
All right, let's wrap this up with the report I most look forward to every quarter, a stock I have never owned before, but a company with perhaps the most colorful CEO on Wall Street, who is maybe the most honest guy as well in terms of his opinions about the state of the consumer and his company and how they're doing. I'm talking, of course, about Restoration Hardware. RH is the ticker. And Jeff, they're going to report tomorrow afternoon as well. What are they going to say? What do we think?
I have no idea. I'm honestly not even sure what business they're in anymore. It's they've said for the last few quarters that demand is just horrible. That we're in the worst housing market since I think the Great Depression. Gary said he might be honest, but a lot of it is his opinion. There's another 10-year chart. He had a legendary conference call during the beginning of COVID, and he talked about how you can't climb luxury mountain with a cane. We're going to storm up the hill. We're going to charge. And damn it if he didn't do it. And he did it by just jamming the shorts. They levered up like crazy, bought a ton of the stock back. So he owns a huge percentage of the company. He's not going anywhere. The problem is he diversified from really super expensive luxury furniture into experiences. And so now they've got a housing development. It's in Aspen, which is pretty expensive to build. They've got an enormous house or enormous office building on the Champs-Élysées, which, holy cow, do the French not want to take furniture advice from Americans? So that store is yet to open and not doing super great. And they have restaurants, which are also really expensive to run. So he diversified from furniture into three of the most difficult businesses you could ever conceive of without a ton of experience in any of them. So, I'm not sure what the financial results are going to be. I'm guessing the Fed, whatever the Fed says in the next couple hours, it's probably not going to be enough from Gary's perspective, and he'll spend a lot of the call. We'll see. He's got investment advisors in there now who shut him down. But this used to be like a Grateful Dead show. It used to just be 2.5 hours of let's just take mushrooms and listen to Gary talk about like freaking the Wizard of Oz and morph into, just crazy kind of space talk. And it was awesome. So hopefully they'll just let him go unleashed and talk about the meaning of Christmas and why people should be buying $15,000 gray couches.
Okay, we don't know what they'll say. We hope it'll be fun the way they say it.
We hope it'll be fun the way they say it. I would not, the stock really get. I mean, look at those spikes. He hasn't made it easy for the shorts. However, it's been. It's if you're short that thing and you rode it from 200 to 400 and you managed to kind of stick through it without having your face completely melted, congratulations. It's down to again back to 150. Lulu and RH have had sort of equally tough years. Lulu is kind of a better company, at least a more coherent company. They actually have a business model that makes sense, and they're not selling rental jet experiences. So if there's in a just world, Lulu would be the one that would have the best shot at saving the year of the downtrodden. But we'll see. I'm not looking for tremendous things out of particularly either company.
All right. We'll keep an eye out for Jeff Mackey's analysis on these reports. If you are a member of the Mackey portfolio, you will get these reports. You get his report cards of these reports delivered to your inbox as they happen. If you are not a member of the Mackey portfolio, there is a link in the description to sign up. But also, the very first link is a link to his newest meeting that he does once a month. And he did the first one yesterday, actually. This is normally a thing for members only. Yesterday, he did it for everyone as a little peek behind the curtain. It was really more of a intelligence briefing is what I might call it, right?
It's a season of giving, and so we gave people a little peek behind the scenes, and right. a little. This is how we go about it. Kind of building our thought process. This is what we do, and it's how I make my living. So I thought the folks at home would enjoy a glimpse at that, and I think they did.
So the links are in the description. If you're watching us on YouTube, check them out. Jeff, I guess we'll see you next week. And what we'll do is next week we'll do a true like earnings season recap. These were the highs, these were the lows. Because it'll be Christmas Eve, and we'll all be.
You know, next week let's do gift ideas as well. Let's give some folks,
Yes.
it's
Love it.
last minute gift ideas. I'm an expert. Man, if you
Oh,
spend as much time as I do in shopping malls, I'll tell you what, you see a thing or two that you might want to buy for yourself or your
that's
friends.
going to be good. All right. We'll see you right here for last minute gift ideas next week. Everyone, thanks for watching.